Welcome back to the Litefinance Global YouTube channel. Today we are going to discuss 3 trading strategies for beginners when it comes to the crypto market. They're going to be something for swing traders, scalpers, as well as breakout traders. So, without further ado, let's jump straight into the video. Okay, let's start with the swing trading. I already prepare a few lines, so it's going to be easy to recognize for us. I don't want to bore you. First warning, you have to be focused. You have to do hundreds of examples because it looks like it might be easy, but sometimes trying to make the decision is gonna be the challenge. So when it comes to the swing trading, I like to trade based on some kind of deformation. As you can see, I have here also 200 daily moving average, and you may use that as a filter eventually. But for me, as you know me, I like to trade based on the price action and what I see. So you may want to trade either immediately move out of the formation, okay, that's what we have here, some flags, pennants, and you may want to join the party immediately. That's the point number 1. Point number 2, that you may want to trade when it comes to the retest of the formation, and once formation is broken, then you have to focus on the changing the direction, okay. So in that case, we have the possible swing trade based on the move out of the formation, okay? And then it was possible to trade some retest of that formation quite a few times. Also, when I'm saying that sometimes structure is broken, you have to quickly do the opposite. You have to be prepared as what we have. For example, here there was a break through the latest swings to the upside, and we were creating some kind of deformation with the very nice retest of that formation and moving nicely lower. So within quite few days or weeks, there was a possibility to make quite few trades in both directions. Also, you may want to try to trade out of the consolidation in the direction of the move out of the consolidation, okay? All of that showing that either trading immediately, trying to catch the swings, or trying to trade during the retest might be profitable. If you are a little bit more advanced and not pure beginner, you may want to use both combinations, right? You may want to trade up and down, depends on what market is showing. Example, another here where we created the big bear flag with the move out of the flag brought quite nice possible profit. Again, it's not going to be profitable each and every time. It's not the holy grail. That's what you have to remember. And also, for example, here, we've seen attempt to continue to the downside, but then when market was retesting this formation over here, there was a not big rejection. So in that case, it could turn out to be the failure trade, but then that was the consolidation. So if we are going to make the attempt to try to trade retest after the move to the upside, right, that's how we are catching the swings, okay? So overall, trying to make the swing trading based on the higher time frame, you are using a little bit bigger stop under the level you are want to trade off under the some certain levels of the formations, but you are trying to catch the bigger moves. The risk is that you are not going to monitor the market 24 hours per day, and we know that crypto is very high volatile, and well, sometimes it might be that you are going to wake up and to discover that you've been stopped out. Well, here you have to do plenty of examples before you are going to risk real money, all right? It's gonna be challenge. Spend a lot of time to try to learn the swing trading. Okay, over to the next one. And the next one is scalping. Well, in that case, I'm using MACD indicator, helping me to determine the entry points. And there are two ways to try to trade scalp based on the MACD. First, we have to know the direction from the higher time frame, and then we are switching lower to 5 minutes or even 1 minute charts. In our case here, we have a 5 minute chart. So what I'm looking for the MACD moving, in the first example, moving lower, and I'm waiting for the histogram to move back above the signal line what we have here. So in that case, the trade would be somewhere around here, and that would be quite quick scalp. In case of the exit, either I'm looking 1-to-1 in case of my stop, or I'm looking for the histogram going back below signal line being above the zero line, all right? So that's the number one. Another example is here, okay? That's also very important. But that's the only first thing. The second thing, that you may want to be a little bit more conservative, and you may want to start to scalp once the histogram is crossing the zero line. In that case, that would be the trade somewhere around here, okay? With that being said, we would be able to catch quite good run to the upside. Again, it is very, very important to understand from the beginner's perspective that in that case, you have to know where we are from higher time frame perspective. If the market is moving higher, then you are looking for a trades into that direction. If market is going lower, then you are trying to scalp short side. And of course, if market is going sideways, then you may want to fade the upper or lower band of the consolidation. That looks very easy, but it will need from your side a lot of attention, a lot of focus. And again, you have to make hundreds of examples before risking your real money. So let's have a look and check a few more examples here. That would be another possible scalp somewhere around here, where the histogram is above the signal line, all right? And that would be the either profitable scalp, all right? Or if you were on the market too long, you would be stopped out. That's what we have to remember. That this being stopped out is a part of the game, is what we have to understand. That would be another possible scalp. In that case, we were able to either make a profit or trying to get out during the consolidation. Not the Holy Grail at all. Again, a lot of attention, a lot of examples before start scalping the market. Okay, it's time for the last one. So the last one is for those who like to trade the breakouts. Doesn't matter if it's upside or downside break. What does matter is the direction when it comes to what you want to trade. So on a higher time frame, you are looking for the direction. If you are a beginner, if you are a little bit more advanced, then you are looking for some swings, and then you may want to trade into direction of the last swing. So I have few examples. for you. Now, when it comes to the consolidation, I like to see the upside break from the consolidation. I like to see upside break or downside break, depends on the direction of the overall market. And then I like to trade the retest. That's what we have here. A little bit of the consolidation, upside break, retest, and that's where I would look for some kind of the entries. That would be, in that case, profitable trade. I'm looking for another consolidation. I'm looking for upside break, retest of that consolidation, and in that case, that would be profitable as well. There was another consolidation, and I'm going to make it a little bit bigger for us. Okay, that was another consolidation with the upside break. Immediately we retest that consolidation, and that would be profitable trade. It was possible to trade again. Why I'm saying it would be profitable trade? Because I know exactly where is my stop, under the consolidation. So I'm trading very tight stop, so I'm getting 1 or 2 R almost immediately. But finally, if we were trading here and we were holding the position for the bigger move, which didn't materialize here, we've seen suddenly sell off. So based on this price action, okay, based on that consolidation over here for 4 candles, we've seen where the supply is. So that was my consolidation, and that would be possible to try to trade into the opposite direction. So you have to know where you are. You are looking either for the bigger picture, so the price action from the higher time frame, all right? You know where you are and you know your direction. Then going lower, you are preparing for execution. You know your consolidations level. You are not trading immediately the breakout. You are trading the retest of the consolidation after the upside or downside break. Okay, you have to make hundreds of examples before risking your hard-earned money. And again, it's not the holy grail, but here is another consolidation with strong move. So there was a lot of demand probably here. So once we retest that level, that was our possible entry point. With that being said, guys, wish you great next trading session. See you around. Take care and goodbye.